Hello everyone and welcome back to my channel. In this video, I'm going to show you how to calculate your taxes. This video is not for everyone because most people do not have to worry about this. But if you are like me, where your income is considered unearned income, or you have to make quarterly estimated tax payments for whatever reason, then this should help you. Now, I will show at the end how to calculate your self-employment taxes, but honestly, I'm not that familiar with it. I do pay a little bit in self-employment taxes because I make a little bit from my online work, but the bulk of it comes from my full-time job, which is considered unearned income and or a scholarship, even though it's treated as my salary. If that is the situation for you as well, then this will help you. For this, I'm literally going to use my numbers because that's the easiest way for me to show you. So let me break down what I'll be earning for the year of 2021 just from my full-time job, and then I will try to explain the self-employment tax. So for the first 5 months of 2020, I will be earning, if I stay at this job anyway, $4,937 for each of those months. And then the following 7 months, I do get a raise in June. That happened. I just get a raise with the pay scale every year, and that's June for me. So that would be $5,160 for the following 7 months. Now, in June, the amount is prorated because it's like in the middle of June, but I just go with the higher number. So then I end up paying more and will typically get a refund. Now, the other thing that sucks for my situation is that I have to pay taxes on my insurance, which is really expensive. So for 12 months, my insurance, health, dental, and vision is $546 per month. So I do have to pay taxes on that. So 5 times this number is $24,685. 7 times this number is $36,120. And then 546 by 12 is $6,552. So if we add this all up, my total income, gross income, $67,357 for 2021. Okay, so this number is important. Then we have to consider deductions. So for federal, the standard deduction for 2021 is $12,550. And then I live in the state of Georgia, and the standard deduction there is $4,600. So with these numbers, I will be subtracting these numbers from my income, and that will give me my adjusted gross income, or AGI. So my federal adjusted gross income is $54,807. Now this number is even more important because this is the amount that we're actually going to be paying taxes on. So for state, we're going to subtract $4,600 from $67,357, and that brings down to $62,757. So this number is also very important. Obviously, it's going to depend on where you live for your state taxes. I'm going to do this first just because it's easier. So for the state of Georgia, the taxes, it's like 5.75. I always just go up to 6%. So I take 6% of this, and that's how much I would pay through the year, which is $3,765 or so. And if we divide this by 12, that would be about $314 per month. So that is what I would set aside for Georgia taxes each month. So federal is a little bit different because there are tax brackets. So the first one is the 10% tax bracket, and this is up to $9,950. This is for 2021, remember? So if you're in a different year and you're watching this, then you would have to look at the tax bracket specific to that, but it's always 10%, 12%, 22%, etc. So 10% up to $9,950, and then 12% is $9,951 through $40,525. 22% is $40,526 through $86,375. So I'm going to stop there because my income falls within the 22% bracket because my federal adjusted gross income is about $55,000. So we're going to work with these three brackets. So in order to do this, you have to calculate the percentage of this total. So up to $9,950, I'm just going to take 10% of this. And so that will be $995. Okay, for this one, I'm going to subtract this number from this number, 40,525 minus 9,951. The difference between these is 30,574, and I'm going to take 12% of that, which is 3,000. I'm going to round it up, 669. And then for this one, I don't make 86, so I would not be using this number, but this number is still important. So I'm actually going to take this number minus the start of this. So 54,807. My adjusted gross income minus the bottom of that bracket, which is about $14,000. So the difference, and then I'm going to take 22% of that. So 3,141. Well, we'll round it up, 3,142. What I'm really doing here is 54,807. So everything under this value, you tax at 10%. Everything within this range, you tax at 12%. Everything within this range, you tax at 22%. And that gives you the total amount that you have to pay for the whole year. So if we add all of this up, this comes to $7,806 for the whole year. That's federal. And if we divide this by 12, that is $651 per month for federal. So these are the two important numbers, and that's how we're going to pay our estimated taxes. And if we add these two up, that shows that I need to save $965 per month for my taxes, and then I will pay my taxes when I need to. So those due dates are also a little different. So you pay in April, you pay in June, you pay in September, and then January of the following year. This is estimated payments. So what I like to do is actually determine how much I would actually need to for federal and state. So for April, you're paying for taxes from January, February, March, so 3 months. So we'll put a 3 here. For June, you're paying for April and May, so 2 months. For September, you're paying for June, July, August, so 3 months. And then in January, you're paying for September, October, November, December, so 4 months. And all that you would do is multiply these numbers by your monthly amount. So for April estimated payments, I would pay 3 times 651, 3 times the federal per month, 1,953. And same with the September, because that one's also 3 months. For June, 2 times 651 is 1,302, 1,302. And then for January, it's 4 months, so 4 times 651, 2,604, and all of these should add up to 7,806. Then for Georgia, you can do the same thing, so 3 times 314, $942 for April as well as September. 2 times 314 is $628 in June. And then 314 times 4 for January, I would pay $1,256. So then you can, total those out and see how much you actually need to have saved per month, or how much you need to have saved for your taxes when it comes time to pay those. This is how I know, though, to save the $965. So if you're used to watching my videos, you know that I set a certain amount aside for my taxes, and it's always $965 just from my full-time income. So this is how I get the number. It's not 100% correct because some people, it obviously depends on your current situation. Like if you're going to buy a house or if you're selling a house, there's a lot of things that could affect this, but this is just the basic way. I definitely 100%, if you have income like this, recommend that you go to a good CPA because it can get complicated. And I know for myself, I tried to do this on my own one year and I messed it up and had to go to him anyway. So I do recommend, you can pay these taxes on your own, but actually filing taxes, I think it's important to go to a CPA, make sure you're putting everything in right. You can make these payments through irs.gov, the federal irs.gov. It's pretty straightforward. You just make estimated tax payments and then you'll enter your information. For the state, you're just going to have to go to your state tax department's website. And it's always on the 15th of the month. So April 15th, June 15th, September 15th, and January 15th are when the quarterly taxes are due. And as I just showed, it is not equal amounts. I'm not sure exactly why they do that, but I guess because we have to wait till the end of the year. But yeah, I'm not sure why they divide it like this, but that is how it is. So it does make things a little bit more complicated in that sense. Now, as for self-employment taxes, honestly, I struggle with this one. So with the income that I make online, I write off the bulk of it. So that's another good reason to go to the CPA because they will help you to determine what you can write off, at least do this one time. And then I don't pay as much taxes, but I do still save. I just put aside 20% of my income just in case, because I would rather save more and or pay more for my taxes than actually have to owe money. However, I did ask my CPA what the best way to calculate self-employment taxes, like how much you have to pay. And he said your net income, because you do still have to pay those, make sure if you're making money on the side that is not being taxed, or if you're self-employed, make sure you are paying your estimated taxes because you will get a fee, and I'd rather not give the government any more money than they need. But anyways, net income times 92.35% times 15.3%. So this 92.35 is based off of the Social Security and Medicare tax. So I don't have to worry about that with my full-time income, but some people may. But this is for self-employment. That's why it's that times 15.3. That's the typical amount. That's the standard amount for self-employment taxes. So that is what he told me. I honestly can't help you too much with this. I just typically put aside 20% of my take-home pay, and there we go. Hopefully I explained that okay. If you have any questions, please feel free to put them down below. If you have a particular scenario, I can try my best to help you, but I'm definitely not an expert. Like I said, please go to a CPA, find one that can help you, and yeah, you should be good though. Just worst comes to worst, if you absolutely cannot figure this out, then put depending on your tax bracket, put 20 to 30% towards your taxes. You need to save that amount initially so that you can pay those taxes every quarter, irs.gov, and then your state tax website if that applies to you. So that is what I do every single quarter and every single year to make sure I'm making the most accurate payments, and I've been pretty close to it, so not too bad. But thank you all so much for watching, and I will see you in my next video.